Good morning, everyone. It is October 17th, 2020, a beautiful Saturday in Houston, Texas. Actually, let me see. It's actually kind of cloudy right now in Houston, Texas, but nonetheless, I think this is going to be a good video today. There's a lot to go through throughout the week. Once again, if this is your first time listening to me, basically what I do in these videos is I just go over some of the interesting things that I saw throughout the week. I'm someone who pays attention to the market every single day, and I actively trade the market every single day for the most part when it can give me the right signs. But nonetheless, I keep a very strong eye on multiple industries, sectors, different asset groups that are relating to the equities market. So these videos are pretty much just the rundown of what I saw throughout the week. So let's go ahead and get to it. Uh, just some things to talk about. Let's go ahead and start off with the earnings picture because earnings season kicked off this week. We had the banks report in, we had Wells Fargo, Citi, blah, 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 all that stuff. The only two that I kind of pay attention to, one are JP Morgan, which has been the leader in the entire banking sector for as long as I can remember because they just have the best CEO and their growth has been, uh, they've been a lot steadier in terms of not only how they reacted, 10 years, 12 years ago from the financial crisis. They were one of the stocks that were, or I think they were the best performing banking stock to come out of that recession. But, they've been performing at a higher premium due to the fact that their CEO is much better and their growth is a lot more stable. So this banking stock is always one that I keep an eye out on. I try to read the report whenever I can when they come out. Gives you a lot of information on what the economic landscape looks like from, the biggest financial institution in the world. Um, so yeah, it was overall. I thought J.P. Morgan did fine. Trading revenue looked really good. Um, the main crux of everything that I think we got from all the banking sectors was there's still more risk ahead as far as bankruptcies, uh, pain in the small business. There's still a lot of uncertainty out there as far as what is still at risk, just bottom line. And all the banks pretty much perform the same way. They all put out pretty much the same earnings, except for Morgan Stanley. And I thought Morgan Stanley really stood out to me because not only did they beat estimates, I think sales estimates by 1 billion or something like that, but they have completely diversified away from the group in general. And I believe they made an acquisition in Eaton Vance last week or this week. So this company is really getting on this M&A track where they're just diversifying their portfolio at a much larger extent than I think any of the money center banks like JP Morgan and Citibank can do. And Morgan Stanley just seems to me like it's a class above the rest, as you can see just from relative outperformance. Now, usually in the past, I've watched all these stocks; they all pretty much move the same. They all follow the same industry momentum, sector momentum, and throughout this crisis, financials and value stocks in general have really lagged. But if you look at Morgan Stanley, I mean, hell, Morgan Stanley had a high pre-COVID high of like 57 bucks. We'll go ahead and say that's, yeah, 57 and a half bucks. I mean, the stock is at 52 right now. So $5, 5.5 bucks off its high. You look at a stock like JP Morgan, it's still well off its high. I mean, this is 140. It's trading 40 bucks off its high. I mean, that's insane. That's almost oh, that's more than 30%. Wait, is it? I think so. It's just around 30%. I mean, these stocks are way off their high. Let's check out Citigroup, Goldman Sachs. Oh, better, but still blah. Goldman Sachs has a little bit better earnings estimates for 2021 than I think some of the other banks do. As you can see, JP Morgan still trying to catch up to that record year in 2019. Same thing with Citi. I think Citi looked good beforehand, but the main thing that you want to look for is can you beat in 2021, because we're all expecting the bounce back and things to return to normal. If the bulls are right, and I truly believe that the recovery cycle will be much easier for the bigger companies because interest rates will remain low. I think the reason rates are remaining low, and everyone knows this, is because the small business the small business side of the economy is just struggling, and they're going to need additional help. Rates will probably go negative in order to help them get back on their feet, and that's going to be really beneficial to every single big large cap company because for the most part, this is a short term correction. They can withstand this type of COVID correction, but the small business economy clearly showed that it cannot. It was over levered. It was just in a bad place beforehand, and the fact that demand continues to be trickling out, and new habits like shopping online more, doing things, going out less, is becoming more and more relevant. I think it's going to be harder for small businesses to get back to pre-COVID levels in record time versus these bigger companies. So, a lot of this, a lot of the backdrop seems really good for 2021, but for the most part, excuse me, for the most part, you really want to see, the companies beat their previous high earnings. So as you can see in 2019, that was the year that we saw JP Morgan, Citigroup all make their highest earnings per share. Morgan Stanley is actually, like I said, having a phenomenal year. They're going to make record earnings this year. I believe record revenue as well this year. Um, this .com deserves to be trading at all-time highs, and you could say that this could be a one-time thing because trading revenue is just so good for this year. I guess analysts are expecting some type of drop-off. Even that drop-off is still above their high in 2019. So I think overall it's looking good from a growth rate value perspective. This is just like from a broad standpoint that I'm addressing this. But as far as looking at financials broadly, there seems to be no other big investment company, banking type company, just a brand name financial institution that is standing out like Morgan Stanley. And so, for just future reference, at least this is how I'm going to play it. I used to always want to play JP Morgan or Citigroup. I mean, Citigroup had that stuff. I think they had a big fine about a month ago. They've been one of the worst financials in the past month due to all the news that's coming out. But I always used to play those two stocks, JP Morgan and Citigroup, and now it's looking like, for future reference, I really want to play Morgan Stanley if I ever get the itch to play financials, or if I ever want to build a long-term position in a value stock, because this is, a company that is growing 13%. I got to see the revenue targets. You can't see it right here, but I mean, revenue seems, I guess, to be a little bit flat, but I think this is, I don't know if this is concurrent. No, they haven't done the most recent one, but for a 9 PE, growing at 13%. Granted, I don't know how sustainable it is, but nonetheless, I mean, if you're going to play financials, this is the only one you got to play, in my opinion. So put this on your watch list for the next 5 years. The CEO is doing a fantastic job, and clearly they are doing something right ahead of all the other big financial institutions. And I believe they're not as affected. They're not in the consumer side or anything like that as much as all the other banks. So that's really helped them too. They're just really well positioned in this crisis, and they're doing a great job on the trading side. So keep an eye out on this one. Okay, so we took on financials. Let's go ahead and take on the healthcare. So there were two healthcare names healthcare leaders that reported this week. It was UNH and J&J. Now, both of these stocks I've been bullish on for about a month or two, or I'm sorry, not a month or two, for a long time. I feel like I was talking about them for a month or two, as being good value trades. As you can see with UNH, I've been saying HMOs, and this is not even just with UNH. You look at Athena Health, ATH. I feel like Athena. Is it? I don't know. I forgot. Oh, and Anthem Health. That's what it was. Anthem. So as you can see, in HMOs, all these healthcare insurance companies, look at this growth. 16% in 2020, 13% in 2021. Let's go back to UNH. 11% this year, 10% next year. Let's go ahead and take a look at another one. Let's take a look at Cigna. 9% this year, 10% next year. And then let's take, I think CNC. I don't think the estimates are that good. Oh, they are, but they're coming down. That's what I read this week. So still growing 10%, 17%. The point is, I've been seeing the estimates, look really good for this sector. UNH made an all-time high last week. Oh, wait, let's take a look at Humana. This one was my number one. Humana looks great. Um, Bottom line, all of these HMOs look absolutely great because the estimates continue to look fantastic. As you can see right here in Humana, this has had double-digit revenue growth for the past 8 quarters. This stock has really not performed like a stock that's growing double digits, and maybe that's just because there has been a lot of political volatility associated with healthcare, as has been for a while, and I think it'll continue to be like that in the future. So that's something that could be holding these stocks down. But just from a growth standpoint, if those political fears start to clear up, and I don't really know when that's going to happen, you could see these stocks really explode because the growth is in them. And the growth has been building, and the stock price really hasn't gone up. So you could see this company like UNH growing 11%, 10%, whatever, 8% revenue growth. That's really good for a company this big. But still trading at an 18 PE and doing this type of growth, it's really good. You're not seeing these companies go overvalued, even though there's still growth. I mean, granted, there's not that insane amount of growth like you can get from like a Zoom, where it's like 600% this year or whatever. But Zoom is expected to go, or that's 2021. Zoom is expected to have 10% in 2022. So those estimates could change, and I definitely think they could change considering some of the new additions that they've added with fundraising and everything like that. But just keep that in mind that growth doesn't always have to be 500, 600% for the stock to take off. And I think once this sector figures out that the political stability is okay, you're going to see these stocks really have a nice run, and you can see this PE ratio go from 18 to 30 because this growth is very nice. These companies are really big growing. If they're starting to get double digit in revenue growth, that's going to be huge for this industry. So bottom line, UNH looked good. Their guidance topped all expectations. They beat the current quarter expectations. So things look great. Things have been looking great, and it's no surprise that this stock, I believe, made an all-time high. Well, it made an all-time high on the day before its earnings. Now, here was the interesting thing, and this was something that I had touched on in the Discord was we have been seeing a lot of companies report well. And granted, there's not been that much. It's the first week of earnings, but Morgan Stanley, I believe, was one company that also reported well, but it really didn't show that much juice in the beginning. I guess late Friday it kind of outperformed a bit. But J&J, ASML is another one that I'll get to in a bit, and UNH, all of them on the first day of their earnings, they actually sold off. And I was really surprised because the numbers looked great. But then again, I've been through these earnings periods where you'll have a company report really good, but it just happens to be that the expectations were built in, or the company needed to beat even the highest expectations. There's an aggregate expectations that a good company usually beats, but during really uncertain times, and you start to see, you'll see this in future earnings seasons, or you've definitely seen it in the past. I've seen it in the past where companies will report good but still sell off. They'll beat on all factors, the guidance, the current estimates, whatever, and they'll still sell off. And then frankly, it's never a good sign. Usually when you start to see things like that at the start of an earnings season, it's never ever a good sign. That means expectations are very high, and it's going to take a lot to break those expectations. And it's not just pertaining to a certain sector or a certain industry. No, it's just like a tone for the earnings season. So I want to keep that in mind because ASML also reported really good too. I thought so. And that company really saw a huge gap down the next day or the morning. I think it reported in the morning because it's a European company. Uh, it gapped down. It's still growing 30%, 29%. Sure, estimates came down slightly for 2021, but when you're still growing 30% then, and you have unique technology, Revenue growth is picking up beyond what it was before. You should not see the stock slow down, especially if we're still in the mode that growth should still be bought. That risk on is still the environment that we're in. So these are small warning signs that we saw. Let's go ahead and take a look at J&J real quick. I know I took a lot on UNH and stuff, but J&J also earnings, right here was looking really good, like it wanted to hopefully get up to the top. And if it had a great earnings, you probably think that it would break out, but blam, went back down. Now the earnings were good, but I think the news that came out that day was also, um, I think it was that they had stopped their COVID vaccine trial. Granted, I think that's noise. I think once again it's going to continue, and any selling that was done from that, I don't think it's significant. But the fact that the stock was not able to bounce back and recover like UNH did, or even see significant volume when other leaders like I think Eli Lilly, um, it saw some buying Friday, I guess, but once again, well, I'll get that to that later, how they closed the market on Friday. But um, a lot of these companies, I think Eli Lilly and J&J were two that halted their progress due to another illness coming in, or another illness popping up within one of the test subjects, or whatever. So they had to halt all progression, but it's going to come back. I think AstraZeneca had something like that earlier in the year, and they've come back as well. So I'm not too concerned about that. But once again, if I'm thinking that it's not that big of a deal, like there are definitely a bunch of smarter people than me out there that'll probably use that to buy on the negative news. But so far, I didn't see that, and that's a little bit concerning considering these companies are still looking good. Johnson & Johnson, still fundamentally a really good company, great balance sheet, great. It's been consolidating for such a long time. You would think that it would break out at some point. I think you could say that. I mean, damn, it's so close. You would think it broke out of its previous consolidation base because the high was 148 and the low seems to be, let's go ahead. I'm not going to use this. This doesn't count. The low was probably 118. And so hell, blah, 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 it got up there. It's still trading above there now, but like, oh, actually, no, it's back down to 148. But it feels like it's tightening up. And for the most part, we can kind of see it on the weekly chart, tighten, tighten, tighten. And it's just wanting to break out. The estimates are looking good. It's going to make record earnings in 2021. And who knows what benefit it's going to have if it comes out with a vaccine that's could be taken, every season. That could be very beneficial to earnings. And their pipeline still looks good for new drugs. I think they're doing, I'm pretty sure they're just diversifying across the board, kind of like how Pfizer is. But overall, I think this company deserves to break out. That's the bottom line. And the fact that it's not seeing this pickup in buying or anything like that at this stage is quite concerning to me. But ultimately, I'm still willing to bet that this stock does well, especially since it has the vaccine catalyst behind it. Granted, that could turn into a negative at any point, like we just saw earlier in the week. But for the most part, it should be a positive thing for the stock. But keep an eye out for that. Everything that I've talked about in the past 5 minutes, if y'all are paying attention, is good earnings are getting sold off, that's a warning sign. So going into next week, when we have some more earnings come out, you better pay attention to which companies are beating current estimates, beating guidance, and looking at how their reactions are. Because if you start seeing on a broad scale that reactions are not really that, like they're sluggish, or even they're very negative, that's a really big warning sign. Because this was the first week that we got it. I want to see it happen for another week before I start to say that is the tone for the market. And usually when that happens, I don't even play earnings. Like even on the best companies, I just don't play them. Like at all. There's not even one that I would take a shot on because the bar is so high that your odds of hitting it out the park, even when it does well, like it's just so tough. Sometimes the market, like for everyone who was betting on UNH's earnings to be great, y'all were right, but the stock went the other way. So I guess that's just something to keep an eye on for next week. Um, and lastly, I want to get to Fastly because that was the main stock of the week. If there was one stock that dominated the headlines, it was Fastly. Oh shit. It went down 33% in 1 week. Damn, that's tough. I'm short. I'm still short high growth. I'm still thinking it's very overvalued, and it's days like this that make me convinced that these companies are very extended, and all it takes is one rock thrown at a glass house to see like so much shatter. I mean, an enormous amount of value shatter in 1 week. Now, granted, I noted this in the Discord is it's pretty much back to where it was like like it's not even down that much relative to where it was 14, 16, 15 days ago. So in my mind, sure, people could be like, oh, it's really not down that much, but that's not how I see it. It's, oh, damn, this stock definitely has a lot more room to grow. If you think that you are getting a value or some type of discount because this stock is trading back where it was 15 days ago, as if there's been any serious change in positive value from 15 days ago to now, and there hasn't, by the way, there's actually been a negative regression in earnings as was indicated in the preliminary reports. Um, that's saying something, and I think you can really expect this stock to do bad. I think I noted it in the Discord. I'm hoping that this stock comes down close to its previous breakout price. I don't think it's going to get down to 50, but I think somewhere in between this line, or I'm sorry, this breakout right here. So between, I want to say maybe 55 and 75. Damn, that's a huge range to kind of deal with. But between somewhere like that, I think this stock can ultimately find a base. But the clear thing I want to make known at this point is do not buy this stock if you think you're getting a value, because this is not a value. It's not a value yet. This stock had gone up. I mean, if we cancel out this week, okay, cancel out what happened this week. The last time the stock was at this price, it was, what is that? Damn, that was at the end of September. We are mid-October. That was the end of September, less than a month ago. This stock was at this price. So I don't know how you can think you're getting a value. Like, do you think this stock is just going to keep parabolically going up and up and up? Like, let's look at the estimates. Like, there are companies, this is not a Zoom type company. Zoom is growing. Look at this, triple digit revenue, triple digit. I mean, enormous. Zoom is the only one that I think you can make the case for, because there is absolutely no other company that's growing like it in this market. But for a company like Fastly, that I remember these estimates, they were projected to be positive in 2021, and now they're still going to be negative. Earnings growth or revenue growth is great, but it's not triple digit. Earnings growth is starting to be, but we're starting to see those earnings estimates regress as indicated by the company. So once again, like this just doesn't make sense to buy it on this dip. And frankly, I don't really know how low this company can go, because I'm in the camp that this could be the type of bubble shattering moment. And I'm not saying these, I mean, I'm not saying these companies aren't a bubble, because I'm still unsure about it. There's reason to be behind them. They're one of the only ones that are growing. But once again, when does price really matter? And I think you're going to see large fluctuations in a lot of these stocks, and it's going to be tough for someone who tries to find the fair valuation of a company like myself. I don't think I'll ever be able to find it in any of these high growth companies. I think forward forward growth has the value of forward growth has changed drastically, and while I think there's a lot of euphoria in that idea, I think it's somewhat justifiable, because we've never seen companies like have all these high gross margins, be this profitable, grow this fast, can get to market so fast and expand so fast. So I understand and get that why these companies can have these amazing moves. Like Fastly went from $20 to 140 in 6 months. I get it. But once again, what goes up must come down if it's not sustainable at that growth rate. And like we saw, Fastly missed guidance by 5 million. Okay. The 5 million. This company makes, I think, $350 million a year, something like that. 5 million. And that was enough to throw the stock down 33%. Now think about that. So it's all about sustainability. If your company can keep that sustainable growth, great. I think then stock prices are endless, can go up to all like super sky high prices because like I said, the value of future growth has been redefined. It has been like people are willing to pay anything and continuously pay anything as long as that future growth continues to accelerate. But once there's a small drop, then you will get that huge fluctuation. And I won't be surprised if we see Fastly go down another 20% this week. It definitely could. Um, and it still won't be cheap, but it may be at the right price for the growth that is somewhat sustainable. Like, actually, I don't even know. I'm not even gonna make a call on it. Actually, forget what I said about like looking at it 55, $65 because the more I think about it, the more I'm like, I have no idea where this is gonna go. First of all, this is the first time I'm experiencing something, seeing something like this where an asset can get so inflated uh, and then, on the day when it doesn't meet expectations, it just collapses. I have no idea where it's going to go. So I wouldn't touch it one bit. But bottom line, don't think you're getting a value or discount at this price. It was just here 15 days ago. Okay, let's be real here. So that's all I wanted to say on that. I still like the company. I think it's a fantastic company. Being in the infrastructure of all these different applications and companies that are popping up more and more as the years goes on, I think it's a great business to be in. I think the total addressable market is expanding even beyond what the estimates are saying today. So I very much like this company. Now I'll be honest, I haven't done that much research as far as competitors or anything like that in infrastructure cloud. I don't know who's doing. I think maybe Frog is one that I've looked at. I don't know if they're exactly the same thing. I was like looking at Frog this week, just trying to understand the company. Um, their website is a little bit hard to understand, but you know, Fastly seems like that's the only one that I've seen make the headline news as far as infrastructure cloud. I think maybe Autodesk is not Autodesk is infrastructure for gaming software. Maybe I think Adobe may have something in their entire portfolio that has to do with infrastructure cloud. But Fastly is the main leader in that industry. I love that industry. I think it has limitless potential, but now is not the time to catch the falling knife. Period. Um, we have no idea where this stock's going to go, and I think it's going to be a whirlwind for the next 2 weeks. You could get lucky timing it at the bottom, but odds are it probably won't be that lucky. Okay, after that little rant on Fastly, let's see, what else do I got to look at today? Let's go ahead and just take a look at what was doing so well coming into the week. So last week, I noted that it was just a fantastic week because high risk assets broadly, whether you're talking about the small caps, high growth stocks, whatever the case may be, both those two asset classes broadly were working in unison. And beforehand, in the past 2, 3, 4 months, we had not seen that. Small caps were largely segregated to the value sectors, which were broadly underperforming tech and high growth. But that was not the case last week. And I thought that was very interesting. And that provided a huge boost of optimism in my short-term thesis to where I really felt comfortable saying that even though I was short, I thought the market was going to go down, or I'm sorry, the market was going to go up this week, just based on what I saw last week. Um, but this week was a little bit different, and I think it was looking great up until Thursday. Thursday was the first day that I noticed that the small caps started to underperform the broad market, which was interesting because for the past 2, 3 weeks it has just been phenomenal. 3 weeks it's just had this huge rise. Even though we didn't get any stimulus deal, you would think small caps would be the most reliant on an incoming stimulus bill. No, it didn't matter. Yeah, as we as we continue to find out, news headlines do not matter. It's all about, in my mind, it's all about short term momentum that can give you the best odds. But you know, once again, really led the market the past 2, 3 weeks. But this week, it actually went down 0.2%. It was fairly flat. But let's go ahead and take a look at the other indexes. Let's take a look at SPY, which was up slightly, but I guess you could say it's flat. DIA, which is the Dow Jones, flat, was slightly positive, still better than the IWM. And then let's look at QQQ, which was up 1%. So for the most part, IWM looks like it's starting to slow down, and that's no surprise because it could be near some technical resistance. I can't really see it this well on this chart, but it's well within the possibility to be at levels to sell off or see some selling. This is just 1 week though. It could be a pause week before it ends up breaking out above there and going really testing those highs that it made pre-COVID, but we'll see about that. The fact that it's underperforming the broad indexes is something to keep note of. But on the flip side, to the high risk asset side, let's take a look at the high growth stocks. Oh, that's not it. Yeah, Sky was relatively flat, but still positive. You can take a look at other high growth leaders like Twilio, up 6%. MongoDB, up 3%. AYX, ooh, down 7%. Okay, not a good week for AYX. What's another one? Peloton, up 6.5%. I'm crying right now, just saying that. A lot of these high growth stocks still had their great weeks, and it's really just seems like it's back to the old usual as high growth starts to outperform and small caps start to feel like the value sectors and underweight. But it just feels like there's so much shifting in the market, and that's what I was saying in the beginning. There's so much to get to because industrials seem like they're starting to pick up. You look at the XLI. I think the XLI was the best sector this week, up more than 1%, outperformed technology. Let me check out XLV, and then XLB. I think was no. Okay, so industrials broadly did very well, and they're still considered somewhat of a value sector, even though their leaders like Deere and UNP, I'm sorry, made all-time highs, which are really great signs for this sector. It just looks like there's a rearranging in the market, and I don't totally trust this breakout. I know UNP made a all-time high beyond the price that I was looking at. I was really keeping an eye on this price right here. This blah, blah, blah. Can you yeah, there we go. Yes. So around 209, it broke out above 209.85. That's about, I usually wanted to break out 1% above that price, but I think it's fine. I think you can, no, well, it was on good volume. I don't know. We'll see. I'll wait till Monday to confirm that breakup. But so far, UNP looks fantastic, and the fact that I'm seeing these all-time highs in many of these names. Deere had an all-time high before it kind of pulled back, but still stayed above its breakout level. That really bodes well for value sectors in general. So once again, you're seeing this rearranging of what's working and what's not. It still seems to me like high growth. Just from what we saw on the weekly standpoint, how they closed, still looks good. Everything still looks like it's outperforming and looking like the old. But this is where I want to get into what happened Friday, because Friday was a very, very, very critical day. And it was also an options expiration day. That could have been why we saw a lot of volume change at the closing. Like I think there was something in regards to Amazon saying all this stock being traded, and I think that was also in part of the options expiration. It was just a one of the craziest Fridays. And to be honest, as being a short in this market, especially being short high growth, I was so happy to see how the market closed Friday, even though, as we just saw, a lot of these companies, Peloton, Twilio, everything closed up 6%. They look like they did good from a broad standpoint. But on Friday, those short-term technical levels on leaders like Amazon, which had everything right going for it on on Thursday, when we got the numbers that they had like record sales for their Black Friday event. I think 3.5 billion sales in a Friday event, and the stock opened up really well. And this is the whole theme that I'm going to talk about when I'm talking about Friday. Everything opened up really well. So just pay attention from here, blah blah blah, from here to the right. So everything opened up well by was that 10:30? What is this? Okay, this is Eastern time. So I'm gonna talk in my time. So by 9:30, the market, or at least the market leaders like Amazon had peaked. So Amazon was at 3,400 pretty much. And by the time this closed, this stock was already like, I don't know what the hell happened here because it didn't even close all the way down here, even though this was in the last minute. Like here, you can see this. Like, look, I don't understand that how you can just have this much sun, but this much, I don't know. Maybe it just was reabsorbed differently. But either way, this stock closed down 2% when it was up. I want to say at least 1%, more than 1%. And I'm going to go through a couple of stocks and you're going to see this happen throughout the board. And let's take a look at Tesla. It's another one on my short list. Opened very strong, 255, ended up coming all the way down, breaking below some key short-term support levels that I had going into Friday. You can't, this is not the charts that I use for my short-term levels, but, breaking through there, still found some reasonable support. It has some good support, I think, around, what can I see on this? Yeah, it still has good support around 430. I'll go ahead and say that. But once again, this reversal sign that happened in Tesla, Amazon, let's go ahead and take a look at Peloton. I was just saying they went up 6%. It was killing the hell out of me in the morning. I was so stressed. I was just on Thursday, I was like, I'm feeling like I'm losing conviction in my shorts. Even though the market had closed down broadly Thursday, I thought it was such a significantly strong day. It was looking like it was going to be a good day Friday. And I noted in my closing note Thursday that, I'd seen the right moves Friday. I was willing to cover half my shorts for huge losses. I just said, the odds of this market breaking above all-time highs, or at least going to all-time highs, would be very high if we were to see a continuation of that strength the next day. Because then it would seem like, how we had this huge drop down on Thursday, we had a very nice reversal to the upside. I was willing to say, okay, by late Friday, if everything closes well and the momentum continues, I'm covering. But we didn't see that. I thought we were going to see it in the morning, and then you had a stock like Peloton go from 140 down to almost 130. I mean, hell, it hit below 130. I think, 129. And once again, that goes with what was happening throughout that. Now, this move happened at around 10:10. So I'm sorry, 9:10 in my time. So they all kind of happened between 9 o'clock and 10 o'clock, where sellers came in across the board. I'm sure it even happened to Twilio too. Oh, but on a much smaller scale, I guess. But came in at 9:10, 9:30. Let me see. I think it happened with Adobe. Yeah. 9:10, 9:20, came in, was doing really good at 5:10, then just saw this slew of selling right there, and it continued throughout the day. And that's different than what we've seen in the past, because usually the market will, or I'm sorry, the big players will end up buying the market towards the close and really creating a nice close going into the weekend. But that's really not what I saw at all Friday. I really saw a ton of selling going into the close, and one of the biggest names that I was keeping an eye out on was Netflix. Netflix had opened up really nicely. It's gotten a slew of really nice upgrades and stuff like that. And as COVID continues to pick up, more analysts are raising their estimates because they're like, okay, people are going to be staying at home for a more extended period of time, and that's good for Netflix. So Netflix was actually at 555 at its time, and ended up selling off 25 points by the close, which is crazy because I don't think we saw that much volatility within the broad market. Like it kind of just QQQ stayed 293, 290. I mean, that's really like a 1% move when you're seeing 5%, 6% moves in these high growth assets. So for the most part, I was surprised by the volatility that I was seeing in the individual leaders versus the broad market. You could even check out the Dow. The Dow was, for the most part, I mean, flat. It gapped up, really didn't break that opening tick until the close. So there wasn't that much broad market volatility, But once again, just what I'm seeing in the leaders and what I saw Friday, it really looks like there was some significant selling in stocks that should be doing well. I think the only one that did well was Zoom. That was the only high growth leader of mine that did really well. And granted, Zoom, like I said earlier, Zoom is just in a category of itself. But these are things to keep an eye out on, these reversals. And even though they haven't broken, the really good support levels where probably most of the buyers are going to be, breaking these short-term support levels really puts them in a bad note, especially when they do it in unison. Um, a stock can break a short-term support level and it'd be fine, and it probably bounces up the next day if it really wants to go up, because that's when buyers come in. They don't want to see that confirm or see that negative momentum build up. But you know, the really strong support levels, those are the ones that you're probably going to see a lot of buyers take place, a lot of sellers take place. And when they break those, that's when the volatility happens. Not really so much on the short term side, but the key factor to watch out for is unity. When you start seeing unity, like we saw Peloton selling off, Netflix selling off, Adobe selling off, um, I'm sure there were other ones that I can't. Let me check out. DocuSign was another leader of mine. I mean, DocuSign had opened up at the high. It was 243, ended up closing down almost 10 points. A 10-point swing, so around 5% swing. Once again, when you start to see this volatility in the leaders outtrend the broad market, I think that's a big sign that the internals are weakening by a lot. So ultimately, going into next week, what I expect is for this trend to continue. This leadership move was very bad, in my opinion. The unity was very telling. And the fact that now IWM is starting to lose steam really makes me feel like high risk assets are at risk for pulling back after having really nice runs for the past 2 weeks. So I think for next week, y'all already know my positions. I'm already short a ton, but I think I'm going into next week feeling neutral. I'll know Monday whether or not this market is going to go back up or down, because after a move like what we saw Friday, we should see a bounce back Monday. As I said before, when these stocks break their short-term support levels, they got to confirm below it 2 days. But usually what I've noticed, and this is why I've tailored my formula to that, is that on the second day, it can easily bounce right back above it. And when it does, that reversal above that support level means the momentum has gone into the Bulls' favor. So I'll know Monday if they bounce back above uh, those short-term support levels. That's great for the market, and ultimately, then I'll change my tone. I'll probably end up covering at least a little bit at that point. But for the most part, if they continue to stay down below those support levels, those short-term ones, man, I think volatility is about to pick up in a big way. And the Fastly move was the first thing that I think alerted people to the fact that this is the risk that is there for buying these high growth stocks. And I think it may have shaken up some people. So we'll see if that selling continues, because once again, these stocks are so overextended. At some point, you're going to have some pullback. Like it cannot go completely parabolic. Like the only stock that can is Zoom, period. And I've already gone over why. Okay. A stock like MongoDB, which I'm short in, like I get that it's broken out on every technical basis. Yes, I get that it's broken out, but it does not make sense to me that in 2022 you are still going to be making negative 89%. You're not even growing that much. You're actually regressing in 2021 in one of the best landscapes for cloud technology and software integration, um, maybe in the like of all time. This should not be the numbers that I'm seeing from a company that I'm expecting to go parabolic. No, at some point, I think the bell will ring for a lot of these stocks. And I think we saw a glimpse of it on Friday. So this week, especially Monday coming in, keep an eye on all these stocks. They may open strong, but once again, we could see that reversal take place. We could see, that reversal continue to plague a lot of these high growth stocks. And that's going to be the first sector that they're going to sell. all these high risk assets that have gone up, they're going to be the first ones to see that selling. Peloton was the first stock on my list that saw that enormous amount of selling in the morning, and then I just started to see it in the broad landscape. I noted it in my note on Friday morning, so that's proof that I was seeing it in the morning, and I warned y'all to keep an eye out on it. Um, but once again, keep an eye out on it for Monday. That's pretty much all I have to cover. It's going to be a really interesting week next week. I feel like I ranted a lot. I'm sorry if I did. There was just a lot to get through. But if you guys have any questions, if you have any detailed questions that you want me to get to, just feel free to hit me up on Discord, and I can always answer you back. We can have a nice discussion about um, anything you want to talk about, whether it's high growth, energy, financials. By the way, I'm pretty negative on energy. Do not buy energy. Okay, I've been seeing a ton of people try and take shots, value shots at energy. No, this sector is going down even more. The leaders are not there. It's just looking bad. Okay, I think that the people who think they're getting generational value right now for energy, no, I think like I think you can get it maybe if XLE gets down to 20. Sure, you can say that, but as long as COVID continues to persist, I'm not seeing any momentum in any of these names. Airlines, energy, the deep value ones that still have risk. So I wouldn't take a shot on them now. I would definitely wait. But anyways, that's what I wanted to edit on. Hope you guys enjoyed this content, and I'll see y'all tomorrow with Amol to talk about the macro things that are affecting the market. So stay tuned for that. As always, peace and have a great rest of your day.